Good afternoon, everyone, and welcome to TradeStation for our webinar this afternoon, where we're going to feature a friend of ours, a regular presenter in the Morning Market Briefing series, John Person, who has one of the top indicators in the trading app store here at TradeStation. In fact, several of his products are housed in our trading app store. John Person is the founder of PersonsPlanet.com, an educational and advisory service company for investors and active traders. And he's got a variety of products and services that help meet the needs of all individuals that are interested in learning to trade, from beginners to advanced students. John Person is an internationally recognized specialist in investments, trading, and financial management. He has written several internationally popular books that target trading futures as well as ETFs and stocks. He's currently an elected member of the American Association of Professional Technical Analysts, and he is the former founder and president of First National Futures Group, a futures brokerage company. He's the founder and the president of PersonsPlanet.com. So we're looking forward to hearing John's comments today on this, on the various trading apps that he has available to us. He will talk, I'm sure, about some of his strategies. The following presentation, however, is for educational purposes only, and all the symbols and any trading ideas that we discuss today are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind in any jurisdiction where a TradeStation affiliate is not authorized to do business. Please remember that active trading may not be suitable for you because it's not suitable for everybody, and options trading carries a high degree of risk and may not be suitable for all traders. I've included in the chat panel a couple of pieces of disclosure information regarding the characteristics and risks of standardized options, but also the risks of some of the other asset classes that we cover here at TradeStation. So with that short introduction out of the way, I'm going to bring somebody over that probably doesn't need introduction to many TradeStation viewers, and that's John Person of PersonsPlanet.com. Thank you for spending some time with us today, John, for this webinar.
Appreciate it, Don. Thank you so much for the kind introduction. And some familiar names in the audience here. Jerome for one, Simbaldo for two, which is I believe just brand new to TradeStation, and it's going to be a wonderful journey with you with us here in joint connection with our products at TradeStation. In answer to, I see Jerome. Jerome, I know you're a troublemaker, and I know you mean well, but I'm going to plead the fifth on how the second edition is coming, I think is what you're referencing. How is the renewed book going? I'm pleading the fifth on that because this is being recorded, and we'll just move on. Let's just put it this way. It's not near completed yet, but it's still forefront in my mind, which is interesting that you mentioned that, because today's presentation and a lot of what Don had just talked about, what's on the trading app store, Person's pivots. A lot of people think that we have a pivot system, which is true, and we've been teaching that for decades. In fact, I started in the business, for those that aren't familiar with me, I started when I was 16 at the Chicago Mercantile Exchange as a runner. I later went on to work with a man by the name of George Lane. George was instrumental in teaching me technical analysis, number one, and screen trading based in using the charts, the old commodity perspective charts. We used to get those at the lobby at the Chicago Board of Trade newsstand. I later went on and started to learn how to trade options when they were first introduced to Treasury bond futures. Was the premier market that they used for the launch of options at the Chicago Board of Trade. That was back in 1984 and 1986. We had an amazing run in the market, and you know, it's just been a phenomenal career ever since. So the staples of products that I've used in my lifetime, obviously I use stochastics and volume analysis, and things have changed through the years and the decades, but funny thing is that the first time that I was introduced to TradeStation was, I believe, in 1996, Omega 4.0. I still have my security block. So if there's all old-time users here of TradeStation, if you know what I'm referring to, the security block, you used to put it in the back of your printer cable, if I'm not mistaken, port, and that gave you the access in your security code. And boy, that was, I mean, night and day to the technology that we have now. So that's my little history there. Let's get into what we're going to be talking about today. I know Don took the time to give a risk disclosure, but I also wanted to make sure that we mention that trading is risky, and well, I guess you could just take a second to read through this risk disclosure statement. Past performance is absolutely not indicative of future results. All right, so let's take a quick overview of what we're going to go over today. And again, it's an overview. It's not a workshop, but I'm going to share with you both from the screen, and then we'll try to go over, if technology allows, and I don't break down, that is, the connectivity, the volume levels, and everything should be working just fine. So I'll go back and share with you some live, what the scans are currently running in the background right now, what they're sharing with us for the rest of this week. But I think it's important to stick to what exactly I've put together, what's available on TradeStation, and what's available in the App Store. First and foremost, the person's pivots, and we'll define what that really is. It's an indicator. It's not just support and resistance. It's actually a very dynamic indicator that helps give us an idea of the next time frame's market condition, bullish and bearish. And under that time frame, or that market condition, bullish or bearish, for example, if it's a bullish market environment based on a factor of a moving average component, it will project a higher high and a higher low out, so for the next time frame. And that time frame, friends, can be daily, which is the daily person's pivots available for free in the App Store, number one. We also have weekly, monthly, quarterly, and for Option Trader, we developed an option expiration pivot analysis. It was one of the first guys to come into the world to actually have that function and feature, as a lot of things, as many option traders are familiar with the term pinning. A lot of times we don't look at a calendar month like we used to, as much as mark dynamic market movements and settlements. Quarterly is very important. A financial quarter, like the first quarter, which March is the end of the last month of the first quarter. We look at option expirations for indices and other markets that expire. And the funny thing is, the monthly, I think through the advent and increase of use of weekly options, the monthly and the quarterlies still dynamic, still attract a lot of more volume per se, except for around earnings season, which, by the way, if you're trading Costco came out with earnings today. They were looking for about a $6 move, and quite frankly, it's been kind of all over the board, Costco today. So it's probably within its expectation of a move. We'll see how it opens up tomorrow. So with that said, PPS, what does PPS stand for? It's actually a momentum indicator. It paints a picture on the chart with arrows pointing up and down, giving you bullish and bearish momentum. I created a volume study, and we're going to go through that today, which is extremely dynamic, very powerful, helps identify convergence and divergence patterns better than any other volume indicator out there. What makes this different is that instead of tracking volume in terms of absolute value or a histogram bar that many people use, it tracks it in terms of percentage change. So it gives us a better relative point of view of the strength of a trend and the distance of a market volume from one move to another. We also use, and I did not invent volume, I didn't invent pivots, but I've just kind of helped to adapt to the changes of our time frames and adapt to the conditions of markets. We also came up with a relative strength indicator, which I find relative strength or comparative relative strength analysis very critical. And I've had a very good relationship with a lot of people, and had the opportunity to be on the same presentations and tables as Richard Arms, who I know personally, and who created the ARMS Index. I've also had the pleasure of speaking at an APTA meeting, being keynote speaker along with Sherman McClellan, as he invented or developed with his wife the McClellan oscillator. And so I've been using, at least looking at equity and equity index breadth analysis for a number of decades. And so it's been something that I think is very unique. And what TradeStation brought to the table is they allowed us to, rather than use just simple breadth analysis on the data from the NYSE, I'll share with you, we actually were able to break it down and construct breadth analysis on all the markets that we trade, from the diamonds, the Dow, to the Russell. And that was very dynamic in of itself, helping us to identify over the last 2 weeks that we should see the Russell outperform the blue chip and technology sector in the S&P 500, which, by the way, if you notice today, while the Dow was down, and it ended up only being down in the futures 56, but the Russell up 15. All day long, the Russell outperformed that relationship. These tools helped us to identify shifts and money flows coming out of maybe the blue chip sector into the small cap sector, which was pretty powerful. I have a last conditional change indicator, and I just wanted to point out that this book, the reason the book right here is sitting here, this is the book that is in the process for the last couple of years of being its second edition. This book came out in, I believe, 2005. What's funny about this, as Don said, it's for stocks, Forex, and futures markets. In this book in 2005, I introduced some really neat ways of trading stocks and using the comparative relative strength analysis of and seasonality between, let's say, Archer Daniels Midland, John Deere, or, for example, looking at an obscure new product that came out on trading currencies. It was called the FXE, an exchange traded fund on currencies. And that was introduced, and it's so funny because we introduced that, how to trade off of an FXE for an equity trader, by using the futures data in that book in 2005. That book introduced people to my person's pivots, the PPS, the last conditional change, and then the high and the low close doji. These are major components of what we're going to share with you today, but TradeStation allowed me to take those indicators, and a lot of the work that I did in the old days, we did by hand, and I'm telling you, it was extremely tedious. So I'm excited to introduce to TradeStation folks what has changed in our way of trading in the market. What we trade, how we trade, where we trade, and when we trade has all dynamically changed through the decades, and it continues to change almost on a weekly basis between the advent between cryptocurrency craze and, of course, with the SIBO's launch and the CME's launch of crypto futures or Bitcoin futures. But you know what's really interesting? These studies and these indicators that we've created, they're not relatively new. We've just adapted these to the times we're changing. So let's get into it a little bit more with detail, and I think you'll really enjoy what we have for you guys in store. So the radar screen, if what I think was monumental for TradeStation was when they transformed charging for their radar screen and to give it out to clients, was monumental, because it's a very powerful tool and a platform that allows me to identify what is going to happen based on a closing basis. Now, on your screen here, I have the radar screen, which has the futures, and you'll notice this is an interval period of 15 minutes. And all of these columns can be changed, adjusted, and we can change this interval because this is my, as you can see, it says futures short term, and that means it's intraday. So I can change this to a 5-minute, a 15, a 60, but I like the 15-minute to help me identify a reversal trend change in the market. This will give me whether or not we're going to form a powerful candle pattern, which I developed, called the high and the low close doji, and this will alert me before a arrow is painted on the charts. And as you can see, this is the Russell, and there's an arrow that's painted on the chart, and it'll tell me whether it's a new signal, what the market trend is, either up or down. It also tells me, based on the intraday basis, what the signal is. If the market was in a downtrend, and you start to see there is a new signal populating, you obviously on a 15-minute basis, I can simply check this out and say, hey, do I want to take a new sell signal? Because if the Russell is generating a brand new signal, a counter trend signal, if the trend says it was up and now it identifies the trend as being down, then I can make a better trade decision. If I want to go with a short position, or if I had been long, maybe I could look to liquidate the position. On this radar screen, it also, on the intraday, has a very unique identification of what the market condition is which allows me to look at multiple time frames. For starters, I can take a look at the intraday, which is this panel of information right here, or as it says, I could look at what the daily status is. So if you'll notice, this is a pivot status, and we're going to talk about that in just a minute, because you guys, if you get the Daily Persons Pivots, it's free on the App Store. The Daily Persons Pivots will allow you to identify what the relationship is between the pivot point and the pivot point moving average. If the pivot point is above the pivot point moving average, which means a short term above a longer term, the market is then deemed to be bullish. So ironically, we're in a daily bullish market condition. What's really neat about the radar screen, or what we did with our work, is we said, okay, great. If the market's deemed to be bullish, how far away is it from support? And what is that support number without having to look at a chart? And of course, the chart has the pivot point support right here, painted green dots, meaning that is the support. So if I'm bullish, I want to know, is the market below, above the daily pivot, which is the blue line, and how far away is it from the current price to the support? And in this case, we can do it in terms of where the support is. Support's 1541, and how far away does the market have to go from its current level to get to support? So we do it in terms of percent change. So that's 1.5%, 1.44%. So I know within a split second I can see what has been a dynamic change from a buy signal or a momentum bullish signal to a bearish signal in any market of any time frame that I choose. That's one of the more dynamic situations that this radar screen allowed me to create my work and put it on there. All right. So with that said, let's go and take a look. And you can see the first thing that we're going to discuss is here's the person's pivots. Ironically, at the end of the day, it calculates the pivot formula. And if the market's bullish, it's going to paint a resistance level and it's going to paint a support level on the market. So yesterday when the news hit, and this is the second time we've seen some type of a negative market reaction within the Globex 5 to 6 p.m. Eastern Standard Time close. The first time was when Rocket Man launched a test rocket over Japan, and the market gapped up, I think it was 12 or 14 handles in the S&P lower during that time period. And this is the second event. The Gary Cohen resignation announcement occurred when the Globex system was closed, and that's what the market reaction did. What's really interesting is that if you'll notice the Russell, and I'm focusing on the Russell because that had been our focus in a long position, we have been seeing the person's pivot on a daily basis projecting higher targeting resistance and higher targeting support. Green is support, red is resistance. So if you download the person's daily pivots, this is exactly what you're going to get. You're going to get, if the market's bullish, you're going to see one big heavy red. And if the market's bullish, because sometimes when it's really bullish, it doesn't quite get to resistance, we have this little light dot red here, which signifies that's the R1. If the market's bullish, then support should hold, and the market should trade above pivot, which is the blue. This gold line, and you need to differentiate between gold and green. The gold is actually a moving average component of the pivot. So like I stated before, if the gold line is, or the pivot point moving average, which is this gold line, is, or the pivot point, the blue line, let's leave it at that. The short term, if the short term pivot is above the pivot point longer term moving average, the market is deemed to be positive or bullish. So in that case, we would look for, if the market is bullish, typically the pivot point, the blue line, acts as support. Now today, this is not a class on how to trade the pivots as much as what is available on TradeStation using my indicators. And this, whether it's a 15-minute chart on the Russell, whether it's a daily chart using a weekly pivot, or a weekly chart using a monthly pivot, or a monthly chart using quarterly pivot analysis, it's all about the same theory, right? It's helping us to determine, without our opinion getting in the way, what is the market condition if we took the value of the high of the session, the low of the session, and the close, and add it up in a computer and take HLC divided by 3, and then use the pivot formulas, and then throw the person's mathematical moving average component behind it. What is the filtered leading indicator stating the market condition? And if it says bullish, then it's going to target a higher projected high, so you'll see it painted on your charts, and a higher projected low, which will be painted on your charts. So that's the, in a nutshell, the great thing about the person's pivot indicator. It doesn't paint 42 different support and resistance. It doesn't give R3 and S3 and all these other things that are out there, because I'm only interested in the condition of the market, bullish or bearish, and then I'm going to trade accordingly. And if the market is bullish, then it should act bullishly. What does that mean? We should see perhaps stronger volume. Perhaps we should see a condition of markets acting bullishly by trading near support and then generating buy signals and taking off. Now, you may also notice on this chart we have what's called the last conditional change indicator. And that was written in that book that I wrote 13 years ago, or was published 13 years ago, excuse me. White signifies it's a last conditional change market. When it generates a fresh buy signal, it paints these little white lines in the sand. And until those white lines in the sand are violated, the market is deemed to be a supporting element. So we get last conditional change supporting. It helps us to identify where to place stops and where better short signals that the trend is ended when the market closes underneath those white line in the sands. Those are very important indicators, by the way. In addition, you're also looking at the person volume indicator in terms of percent change. So if the volume starts to kick up and the trade is bullish and we're starting to get buy signals, then guess what? We can say that the condition of this market is healthy and we're seeing a strong rally out of the market. So that is, in a nutshell, what was shown to you in the radar screen, believe it or not. Right here, all that information is on the chart. We had the market in a high closed doji. It's been in a bullish trend. The bullish pivot system on a daily basis is bullish, and we know that the market is 1.5% away from its support. And that's exactly, if you take the radar screen here, this is exactly what this is a 15-minute interval right there, and this is your 15-minute chart, and that's exactly what the 15-minute chart signifies right here, blown up. All right? Now, let's go and take a look at what else we've put together. This is, we have for longer-term traders, and my more favorite thing is I'm more of a diversified trader. I trade equities. I trade options on equities. And one of the things that TradeStation has allowed me to do is to create a way and a mechanism of looking at relative strength. And a couple of the things with the radar screen that many of you already may have is I always like to take a look at what the average true range is. This is something that was developed by a guy by the name of Wells Wilder. And I also like to look at the relative strength. And what we created was a relative strength indicator, which helps me to identify the market in 4 stages. Whether the market is outperforming the benchmark, whether the market's starting to lag, whether the market is weakening, or whether the market is improving against the overall market. and it's formed in a histogram component, and it's color coordinated. So if it's below the zero line, it's negative. If it's below the zero line but improving and it becomes fuchsia, we can tell between the solid red is a sector or a stock that is underperforming the major averages, and the moving averages is going down. And this, as we've highlighted this line in white, we're picking on McDonald's in this example. So let's take a look at McDonald's in the next slide, and I can tell a look at what the last is, what the volume is, what the 10-day volume is, which is something we like to look at, a comparative analysis on the last 2 weeks of volume, if this is a daily chart, for example. Are we in buy mode? No, we're solid down. Are we in a weekly buy mode? No, it's in a disastrous free-for-all. And the relative strength through the overall market is weakening. So that would tell me that if I get a short-term buy signal, I'm a counter-trend trader, and I probably want to wait till the higher degree time frame signals start to pop in a buy. So that's what the power of what we have here to look at. Let's move on. This is, as you can see, McDonald's on a daily chart. Now, what we have is the monthly person's pivots, and the monthly person's pivots, as you can see, as we started to end January before the fateful crash of the market, generated a PPS sell signal at monthly resistance. But it wasn't just a sell signal in McDonald's that was interesting. This is a volume indicator that many can use. It's free. It's called the on-balance volume. The only thing I've done is I've added a moving average component that helps to identify when it breaks below the moving average. But this is the relative strength indicator. And what's really interesting about the trade in McDonald's is it lost its relative strength way back here. And even though the trade started to move and went higher, the higher it went from the beginning of January to the end of January. As McDonald's went higher, it was losing its relative strength. Now here's my volume indicator, which completely is a different picture than on-balance volume. Why do I say that? Well, first and foremost, the on-balance volume made a higher high, and it may have suggested to traders that this was a strong volume rally. When you look at my volume indicator, it had a lower high and actually shared a bearish divergence pattern. Down below, just to make things all equal, I put up the volume histogram that many traders still to this day use. And quite frankly, if you notice the trend of the volume, it's going up, signifying that maybe McDonald's had more upside. The person's monthly pivot said there's resistance. The PPS indicator flashed a reversal sell signal in a very strong divergence situation between the volume and the relative strength. Now, you could look to sell short, or you could just simply avoid this stock. And that's what the relative strength indicator for equities traders does. It may not tell you to give you the precise time of your sell signal, but it'll tell you that something's wrong with the market, and if the market's going up and the relative strength is weakening, there's a problem with it. And then obviously we have resolved the issue, and the problem is it was way overbought. McDonald's has gone from almost 180 down to where it's trading currently. Today it had a little uptick. It's at 152, but that low was 146.84. 146.84. A disaster for anyone who was buying that high. The relative strength indicator and the volume tool was phenomenal. And that's, I think, how did we address the changes in what's happening in the market? And what has happened in the market is people no longer are just trading McDonald's. It's an indexed related stock. So there's indexing going on. So an index fund who needs to trade that mirrors the index, the Dow or the S&Ps, whatever the stocks are, they need to buy that stock. Whether they like it or not, it has to be in their ETF or it has to be in their fund, right? In addition, other traders may not want to buy McDonald's. They can simply sell a put, buy a call, and they are in a synthetic long position. So the funny thing is, if I'm in a synthetic option long position, guess what? That volume of that trade does not reflect in the volume of the actual underlying security. And that's where we're starting to see, and have seen since I've been teaching about this back in 2008-9, that the on-balance volume has given better signals. But because of institutions and computerized trading, looking at the relative change of one rally to one relative change of the other, that's where in terms of percentage, it gave us a complete different picture, and that's where this is a volume indicator in the form of a momentum, and that is given better signals, and that's one of the things that we've created in TradeStation. All right, so there, as you can see, there are some advanced tools that have given us assistance in the marketplace that are better than the average tools out there. This is Occidental Petroleum. And while Occidental Petroleum, and I did a presentation in TradeStations, we did it in London with the TradeStation office, and we were back in London sharing how we were more prone to wanting to be a buyer of Occidental Petroleum, is why I bring this up to your attention. One of the reasons we started to see the relative strength and the volume kick in, and the weekly longer term even look more dynamically bullish, and the longer term won out because the market in Occidental did rally. However, in late January, the same situation, it came right up to the monthly person's pivot, forms a sell signal, but look at the market condition when that sell signal was generated. The volume indicator did have and was flashing a volume bearish divergence situation. Price made a newer high, volume made a lower high. But the on-balance volume did not share with that, and even the volume histogram showed there is an increase in the volume, so alluded to a false sense of security for buyers. Meanwhile, the relative strength, the person's market catcher, started to show that we went from firing off bright blue to dark blue, the moving average changed to red, and then it went negative. And you can see clearly the divergence in the relative strength versus the overall market gave a heads up to get the heck out of Dodge if long on Occidental. And that was a very powerful, and this is the kind of stuff that we look for in our trades and also for buying opportunities as well. All right? Very interesting way of looking at a market, and guess what? When I shared with you on the radar screen that numeric value, the numeric value is what you see between the actual reading, which is real red, right, of Occidental Petroleum, and the moving average component, which is yellow. So these two values will show up on the radar screen. So just knowing what a red value means, it means that the market's underperforming, and we want to start to wait for a market that's starting to move up with a buy signal on strong volume. That's the conditions that we're looking for to be a buyer of the market, not a relative strength that's moving down with red numbers. That will help us to avoid a stock and a sector, and that's the way we look for trades and use the relative strength index on TradeStation's radar screen. All right? Okay. Now, let's talk about another really powerful function and feature is my scans. I have created between, and you can clearly see some of the names here, can't hide them. I have different scans for different conditions. I'm looking for a buy signal when the daily's in a buy, when the weekly's in a buy mode. That's a conditional change called a continuation pattern. So I'm looking for one. I'm looking for a scan. Show me how many buy signals exist at maybe the monthly or daily or weekly pivot point. That's pretty important. Number 3 is another scan that we have. It depends on the market condition. This is give me just a simple buy signal near pivot, not a buy signal when the daily and the weekly is in a buy mode. So I'm looking for higher time frame move. If we're in a weekly buy mode and the daily generates a buy, it will share with me we have some follow-through potential in the marketplace. So depending on the market conditions, I can say, well, what are the conditions of these buy signals, right? Now, buy signal number 4 I'll share with you is just nothing but just a PPS buy signal, and I run that as a kind of an inherent breadth analysis. Instead of looking at how many stocks advanced and you have to look at a stock that's up more than a penny or two. But let's say you have more stocks advance than decline, but it still did not generate a buy signal. I find that a buy signal gives me, if there are more stocks that generated actual buy signals, that tells me that there's inherent strength into the market. It wasn't just a lot of things have to happen before that PPS buy signal is generated. And then finally, this buy signal number 5, that's a combination filtering situation that tells me how many buy signals came on an uptick in volume, because I need to see an uptick in volume and an increase of relative strength. So if I get a buy signal filtering, if I want to just look for buy signals that were up with strong volume on relative strength, that's the ones that I'm going to look for. The same is true with high closed dojis, and then we do it for a weekly basis, and then we do, those are the scans that we run to help filter out buy signals, and these are the scans we help to filter out sell signals. So that'll give us a better gauge of what we're looking for, as well as this screen was made the other day for compliance, and as you can see, F5 Networks populates. We try to take a look at what stocks are in a relative strength mode. Back in the day when it generated in December a high closed doji, and that's an orange candle, which signifies an orange, the candle's painted orange because that means it's a high closed doji formation. The monthly is in a high closed doji bullish bias. So we have the number 1, the high time frame monthly in an upper trend, 2, weekly in upper trend, and then we generate a daily buy signal in the market, and it shows what the condition is. So I look at those 3 time frames and I can see, gee, the relative strength is up, the volume went down because the trend went down, the volume on the weekly's up, and the relative strength on the weekly's out of control. So this is a stock that did break out, and it is in breakout mode, and obviously it had some follow through. All right, so this is how we utilize the radar screen to help select stocks and sectors in the marketplace. So I want to introduce to you what we've done recently, and something that's taken, I wouldn't say it's been a long time coming, 8 years in the making. It's an algo optimizer, and only because TradeStation has so many different components that people can build and develop their own trading system. Other people are not versed in that, but yet want to be able to change and adapt for market conditions. So think about this for a second, gang. What changes in the market? The S&Ps are the S&Ps are the S&Ps. The E-minis are the E-minis are the E-minis. The only thing that's really changed with the E-mini S&Ps, the value's changed, but the volatility changes. So if someone has an E-mini S&P system that they lease or they've bought, why can a system work one year and not another? Because its parameter settings have been set for the condition of its past historic changes in volatility, or maybe another way of stating it is average true range. Risk-reward ratios could change. Trailing stop functions could change. But trading hours are all the same, right? So we haven't really changed the trading hours. The margin requirements can change, sure, but what makes the market change? And it's the velocity or pace of market changes. We went through a period back in October of 2017, just 5.5 months ago, gang, where we were walking in the day with a 3- and 4-point S&P move overnight. And through probably 12 trading days in October, we had less than a 10-point S&P range for those 12 trading sessions. It was insanely mind-boggling, obnoxious, numbing, because you couldn't really do anything. And if you had a trading system that was looking to take 5 or 6 points out of the market when we were only getting 4 or 5 ticks in every movement, and the market wouldn't really move, it was a problem for systems traders. Now, if you take a look at a 5-minute chart, we're taking 7 to 10 point moves in the S&Ps. We're talking 28 to 40 ticks in a 5-minute time period. And that is incredible because our current ATR, the average true range in the S&P 500, what we've kind of gone from in the market was, again, in October, this really small, narrow range to even looking at today's action. The average true range is about 50 points. It's 47.5 points. That's our 10-day average true range in the E-mini S&Ps. The E-mini Dow, the Dow right now, the average true range is 485 points. That averages out over 10 days, right? Take the 10-day average of its ranges. That's a lot of movement in the market. That gives you a lot of opportunity to make money. But just remember, as the risk disclosures in the beginning stated, there's a chance for opportunity. There's a chance for opportunity for both sides of the coin, making money and losing money. So in this fast-paced movement, market action, we need to adjust our trading systems for maybe the length of time we hold a position. Maybe we need to adjust for our profit loss targets, and you have to kind of maintain a trading system. Not over-optimize, not curve fit, but the key word is maintain a trading system for market conditions that change. I hope that makes sense. And this is what we created in TradeStation, is a solution for retail traders who've had a problem, who maybe wanted to use a trading system or perhaps use indicators that can paint not just the entry, the loss, and the profit targets, but also be able to utilize a couple key functions. This is a mini Dow system. Equity curve's pretty decent. It trades 2 contracts, and you can clearly see it trades 2 contracts. The equity curve, and that's what this strategy equity is all about right here. It has seen a drawdown and sideways action since the last week or so because of the fact that it had an insane January, it had an insane February, and so this is a recovery of its peak equity. Crazy market. It's absolutely ridiculous. But what's ironic is that you can look at this system and say, and be able to take trades or turn it on or turn it off, alter your position lot size, and I'll share that with you in just a moment. This is how it works, whether you like futures or not. This is a small little model that we use to help identify swing trades, and weekly options traders can utilize this to say, gee, when we get a buy signal in the market near a weekly person's pivot. This is a 60-minute chart, and again, this is a 60-minute chart using the daily person's pivots. But if you get a buy signal, I know where my risk is, I know where my entry is, and I can kind of figure out what my profit target is. So instead of taking maybe a stock trade, whether it's, and this takes both longs and shorts. This is not a long only. This is a long and a short. The longs, obviously, and that's what we're highlighting here, is almost a 3-to-1 profit factor versus the shorts. Now in Amazon, in its defense, it's done nothing but pretty much since the time frame here of January 2017. This is a year and almost 3 months old. As you can see, over 230 trades, and it's fairly active. It has a balance, obviously taking more longs than shorts, not picture perfect, but a dynamic indicator to help people identify when to get in and when to get out. And again, leaves a little bit of money on the table, gets back in, and does some phenomenal things. Equity curve is pretty spectacular. So again, it is a system that will, or it's not quite a system. I don't mean to call it a system. It's an optimizer. This has been a signature product that we've been using, the VXX. How did it do when the volatility of the market in February, as everyone was looking at, exploded? This is the performance of the VXX since its inception of January, where it actually started at 09, but in January 2010 is when it really started to pick up with velocity of volume and tradability. The equity curve is pretty outstanding, and there's a couple models that we use for this. The problem is, and here's a system analysis right here. Right before the crash, the system went long. What did it do? It took its profit, and it left a lot of money on the table. It didn't get back in. And one of the main reasons it didn't get back in, it hit an average max profit over time that states your profit is so great, then hit the ejection button. It did. Why did it not get back in on the long side? Because when the buy signal ensued, the risk parameters that set did not allow it to add to a trade. Because if the risk is too great, it won't take the trade. So it had that functionality to it. What's really unique about it, though, is it went short, it covered, it went long again, it covered, it went short again, it got out, and I mean, it's just had a new, fresh equity high for the year. Fantastic product for trading, and that's what these green dots mean, equity high. So again, this is something that we've developed with our indicators and allow people. We built this strategy and we give these exact settings out for those who use and have the person algo optimizer to give them a hand in looking at other things. Here's what's unique about the person algo optimizing product. A, it allows us to set and optimize when's the best time to trade. When should we start to trade? Should we be trading at 3 o'clock in the morning if we're trading the ES? If we're trading bonds, or if we're trading gold or crude oil or the euro currency? When's the best time to trade these products? What's our stop time? What's the best end time? What's the highest window of profitability? And let's optimize that. And we can calculate that and optimize that. So we can set our time frames. And more importantly, you see where it says position calc method? Well, this is set at number 3 for futures. Number 3. Let's discuss this. Number 1, you input your position value. So if you only have 10,000 to trade for equities, then you would set number 1. And guess what? It's only going to put you in, and it'll divide per the risk, per the setup, per the strategy, as many positions as $10,000 will buy. Calculation method number 2 will put you at position risk amount. If you say, hey, put me in as many positions as possible, but I'm not risking any more than $1,000, it might put you into 1, it could put you into 10. Or if you're using futures, we can use the positions calculation method number 3, which sets a stagnant position size, and generally it's 2 lots. So there's a lot of different functions that we put together to help optimize and run scans and to say, what's the best time to trade? What's the best risk reward? How do we trail stops? If we have a function that says the ATR is 500 points in the Dow, and the Dow does this all over the place, right? And trends. If we have a buy signal, in what's the greatest profit potential we should take? Is it a risk reward method, 1-to-1, 2-to-1, 3-to-1? And if it's 3-to-1 and we have a 3-to-1 risk reward ratio, and our stop is down here, X is the symbology for a stop, by the way, guys. And we have a 10-point handle move to the upside in the S&Ps, for example. Well, I want to trail a stop. Well, what's the most efficient stop trailing method? Should we kick in a stop when we're 50% max profit target? And if so, start to trail the stop at a 10% pace. So as the market starts to move up, we'll have a trailing stop function in there. And that's part of the programming that was created. It's very sophisticated for a retail trader. And this is kind of what I was referring to by being able to optimize, whether it's the start time or the stop time. That key that I was just talking about is section 3. We have 9 different sections that we've built in here for traders. And it's under money management, And what's really cool is we can optimize all of these functions to find out what's the best time of day to trade or not to trade. Should we be trading at gold at 8 p.m. when the Asian market session is trading, or right into that period? Should we not be trading at that point in time? Should we turn the machine on? And my advice to anyone using an automated algo optimizer is you don't just put on the system and walk away and play golf. Several things can go wrong. I can think of one. Your internet connection dropped. The connection to the server dropped. You lost power. A lot of things can go wrong. So you always want to be able to monitor the system. What this product does is say, hey, if you would want to be short here, or the market generates a signal and you might not see it, And instead of taking the sell signal, you take confirmation of the sell signal. Guess what? What's really neat is that this is in case, by the way, gold. So if you look at gold, one of the things, and by the way, this is from today. You'll notice the date. We were able to create this. We actually had a nice short trade in gold that we took in our trading community, and it was very similar to this exact same setup right here. Basically, the market broke down a last additional change. It broke the pivot, and once we got underneath that 1329, 1330 area, we identified that 25, the pivot to the 3-period pivot point, that the moving average component right there would act as support. And that was exactly what the system did. It did what we were going to do discretionarily. What an automated system should do for someone is to help you enact a trade faster than once you see it and your hands on that mouse, and then all of a sudden the market moves away from you, or worse, you get the second thought jitters. You say, well, I don't want to take that trade. It just moved up and down on me. So this is an automated system, and you can use it to auto-execute the trade, or you can use it as an indicator. And you can say, gee, how's the volume looking? Person's volume indicator's pointing down. How's the volume looking? It actually looks a little bit, what would you say, as the market made newer highs in the overnight session and the indicator made newer lows. I call that bearish divergence in the marketplace. So as the market started to eke lower, it was going down on stronger momentum of volume, and that's that volume indicator that I was referencing earlier that's available on our products. So this was a very interesting component. Here's the equity curve year to date. While it's not as smooth as other products, it is, again, gold. It's a little jittery, but just trading, again, 2 lots. It's a fantastic model to trade in this time period. And gold, by the way, really hasn't had, I mean, it's been kind of a tricky market. Many of you, if you trade futures, you know it happens in the Asian session, or maybe you don't get a move. So it's very selective in its trades. Hasn't been as active as other markets. But still, we like to see that equity curve or that performance to the upside. Now, what's neat about this is how can you execute trades? Well, you can change and choose your optimized setting for the time frame you want to trade. What does that mean? Well, if I'm going to trade the night session, or I'm going to trade the day session, I can select the time I want to trade. I want to trade, in fact, we'll go back here before we conclude it. And let me share with you another function. Some people want to trade the European session, and also, as well, the U.S. session. Or maybe you found out that I don't want to trade from 2:30 to, 10 o'clock at night. I only want to trade one session. You might find that from 2 a.m. Eastern to 6 a.m. Eastern is a good time to trade maybe the euro currency when it starts to move again in that period. And you then may want to say, well, you know what? I'll trade maybe between the 10 o'clock and 1 p.m. session in that time frame, and reduce maybe intraday noise that the markets may not be as fluid, or there might not be as action. What does this represent? This would represent right before the European Open, and this would represent right before the European close. And then everything in between you wouldn't want to take. We give the opportunity for people to find out what the best time of trade is in different slices of time. And that's very cool as far as finding out the best time to trade in a marketplace that provides optimum returns. So that's what this slide, choose your optimized settings for the time frame you wish to trade. You can choose to auto-execute using TradeStation's unique features, and I'll share with that in a minute. Or you can manually select if you want to take the trade or simply run it without alerts. And then you can set up strategy positions to alert of any new trade. So you can trade it automatically, you could trade it with confirmation, or you can just simply use it as a guide to say, hey, it generated a buy signal and it's painting where the stop would be. I can kind of figure out, because it's going to paint where the profit target is on that trade, and I can manually trade the signal. And this is how you would do that. You could simply, when you go to Format Strategy, you could go to Generate a Strategy and Display of your Trade Managers tab. You turn on and say, I accept the risk disclosure there, and automate trading in your trading account. And then you can trade the account with confirmation. If it's turned on, it's not going to send a trade every single time. It's going to pop, a window will pop up and say, do you wish to put this trade on? And then you have to say yes, and then it just fires off the orders, the entry, and it's going to trade automatically. So if this is something that I think is, again, a way that not many, and I want to repeat this, not many platforms, unless you're a professional hedge fund who've created their own products, not many platforms out there have this capability, and that's what's so exciting about TradeStation, and that's why many of you have seen me at either the Traders Expos or in private seminars, and I share with you how this works. It gives the retail traders and TradeStation, I mean, this is what, when you think of what algo trading is about, this is the kind of function that allows you to maintain a trading system, maintain an idea of how to trade, and it gives us various products to trade across the spectrum of market. Funny thing is, TradeStation did a lot of really great things in recent history. They eliminated the fee they charged for their scanner. They eliminated their fee for the radar screen, and more importantly, they relaxed their intraday margins on some products that you can day trade. Now, I never, ever in my life suggested someone trade with anything less than half initial margin. In fact, I always recommend, if you're trading an algo system like this, and you have to have full margin plus drawdown cushion for each position you trade. And I think that's the one thing that retail traders always put themselves behind the 8-ball and put themselves in a disadvantage. They trade too much leverage, they don't have enough capital to work with, and they're fighting against professionals that have exact functions and features like this, and they're trying to win against the market. So don't ever put yourself in a disadvantage in trading in the market. So I'm pretty proud. This is what I would consider the pinnacle, literally the pinnacle of my career, of putting this together and working and constructing this, of all my indicators and everything that we've done through the decades. And the reason it's special is because a lot of people create systems and they charge monthly fees and ranges from, I don't know, $90 a month to $350. And it controls your position size, meaning you might rent the system and you can only trade so many positions, and then you can, like, maybe trail. There's a lot of different services like that. And they're black boxes that you can't optimize or maintain is a better word. I don't like the word optimize because people over-optimize, but you have to be able to adjust for periods of changes in volatility. And the fact that I just mentioned, in October, when the S&Ps were at a 10-point handle average daily range, and we're at a 47.5. I mean, we're almost 5 times the average daily range now, and it was 6 times last month, 6.5 times actually, than it was in October. And in the quarter ending, the fourth quarter, half of the third quarter and most of the fourth quarter, you know, we were less than a 20-point average true range in S&Ps. So if you have a system that's adapted for a 20-point move, you're going to have a problem when it gets into 50, 60 points unless you adapt and maintain for those changes. And that's what this product does. It allows you to custom tailor, number one, the time sessions you trade. It allows you to auto trade or manually trade, the quantity you want to trade, the markets you want to trade, and here's the key. It allows you to take trades long or short only, or you can take both longs and short. Why is that important? Let's say you wake up, it's 1 in the morning, and you go, by gosh, the dollar, one of these days, when a Fed chairman says the dollar reigns supreme and a strong dollar is in the interest of the United States, when they actually mean it, right? And we see a strong dollar, and that would mean the euro currency goes down. So the next time a Fed chairman says, yeah, we really want to see a strong dollar, I've been hearing, I remember Alan Greenspan repeating that out when long-term capital management was blowing up in 1998. You'd sit there and go, really? The strong dollars in the, yeah, it might be in the greatest interest of the United States, but you're saying it, but do they really mean it? I mean, when the euro currency was trading up there at around 157, it didn't make it fun to go travel in Europe and spend dollars for euros. It just wasn't fun. In 2007, December, when the British pound was $2.11 to 1 pound, that was not fun being there. So at least spending that kind of money. So the dollar does not reign supreme sometimes. But when and if it ever does again, all right, when and if it ever does again, and you want to get short the euro currency in the night session, instead of taking longs, you just simply turn off the buys and only take sell signals, whether they're PPS or low closed dojis. If you have a system like maybe Amazon or that a stock that you only want to take longs, you can only take longs or turn it on for both, take long and shorts. And that's one of what I wanted to just point out to you, the difference. And I know we're going to wrap this up right now. And I wanted to share this slide, this screen sharing, if I could, real quick. It just went blank. Hopefully everything goes right. And I'm going to change this and give you an example of just that function of long versus long and or short and long and short only. Now, many of you might not be familiar with trading a volatility product, the VXX, and it might scare you. But this product is designed to do one thing and one thing only, and that is to actually go down. Throughout history, when the stock market goes up, this is an exchange-traded note that trades off the futures and the two front futures contracts of the CBOE VIX futures. We have this thing called contango, and every month when theta crush comes in, the contango goes down. This comes in line, or the futures come in line with the cash. Guess what this thing does? It'll go down. So the nature of these huge moves right here is when there's a mini crash in the market or the market sells off, and you will get those. This system to your left takes longs and short only. This is our staple product that we use. You'll notice that its profit factor's a little bit different than this product, which is the same system, and what it does is it only takes shorts. How do you know? Because look at the long column. It's empty. It's pretty close to about the same, but one takes long and shorts and provides more profits, and in the same time period, one only takes shorts. So again, if volatility calms down, if the stock market goes back up, then this thing's going to go down. So you're going to want to take shorts. But every once in a while, you're going to want these long positions in the marketplace. The difference between short only and long only, obviously it struggles with making money on the long side because only every once in a while do you get these huge little bursts of upside movement over the last 8 years it's been around. So again, a very formidable trading model and system. But if you identify what the nature of each product is, then or you can kind of control whether you want a long or short only model. That's what I wanted to just make sure that we understood. What did I mean by take long or short only or both? And that was the case. So that concludes our time together today. If you want information about this, it is a one-time purchase fee. You need to call our office, which is 561-655-1881, and talk with us, leave a message, or simply email us at info@personsplanet.com. When you look at the lifetime package, which is the radar screen and the indicators, when you look at the Algo Optimizer, which gives all of this training, we give out the bonus VIX, a spider, the YM, and crude oil strategy settings. There's all types of education, continued education, monthly meetings, and of course we always do what's called our PUG meeting. It's called the Persons User Group for TradeStation that we conduct at our own company at personsplanet.com. If you want continued education, visit our website at personsplanet.com for free video trading lessons under TradeStation's at top header, and you can of course visit the trading app store and download a copy for free, the Daily Persons Pivots. I'd like to say thank you very much to TradeStation, Don Prattle, who had invited me to introduce you to my products and what they do for the retail traders. As always, we are visiting doing Monday mornings for the morning market briefing, and you can catch our market analysis there at 9 a.m. With that said, I thank you all very much. Thank you very much, everyone, for attending, and I hope you found today's information both helpful and at least eye-opening as to what is available and capable both from TradeStation and app developers like myself. Thank you, gang.
Ladies and gentlemen, John Person is one of the most experienced and knowledgeable instructors in our business, and we were very lucky to have him with us today, as we are every week. But today was a very special presentation where he carefully outlined and detailed the many opportunities that you have with the products that that he understands and he's brought to the market, and that are compatible with not just the TradeStation platform, but many other brokerage houses as well. He's in high demand, and so his time was very important to us today. All right, it has been a wonderful trading day, I think, for many of you, and you stayed with us till late into the early evening here and at TradeStation. And so we will be back tomorrow morning for the morning market briefing, starting, as John pointed out, 9 a.m. Eastern Time, and we'll see you then. Have a great night.